there's an amazing trick to reprice employee stock options with a new 409A if you raised at a high valuation. So let me explain the mechanics of this so you can sort of understand what I'm talking about, the difference between preferred and common stock, and sort of how this can, when you know you need to do this. So a 409A is basically a report done by an outside firm that assigns a price to employee stock options. And the reason is because it's basically compensation. And so the government wants to keep track of it. And if the company is acquired, there needs to be some sort of base price of the option so that the acquisition price minus the option price is what the employee basically gets. And so an outside firm needs to do this basically analysis. And so you contract them once a year and they price the stock options. So if you raised money in 2021 at a very high valuation, the stock option prices could also be relatively high. So if the investor paid $10 a share to buy the preferred stock, employees have common stock options and investors have preferred. Preferred has a lot more rights. So the common stock options, because they have no voting rights and they're at the back of the liquidity preference, they'll always be lower than the preferred. So it might be, let's say, $3 or $4. The issue is that if your valuations are collapsing, let's say 75%, now the employee stock options could be underwater. So let's say now your business can only raise, money at a $3 per share preferred. So the employee stock option is priced at $3, and now your valuation is at $3. That means your options are basically worthless because the options are only worth the valuation, how much it's in excess of the option price. So the options may have no value or be totally underwater. So what you can do is the board can vote to reprice a 409A in like sort of one-off situations where there's an extreme dislocation or the business itself has suffered in some way. And the firm can come back in and reprice the stock options, even if they were issued sort of in the past. And so they could reprice them, and it's very likely that they would price them at maybe say 50 cents or $1. And so you can actually get your employees back into the green, even if your valuation has dropped, by repricing the option. So think about doing this. It's a great thing to keep your employees incentivized and to keep them coming in and working hard during a hard environment.